Peer-to-peer lending, also known as crowd lending or crowdfunding, is when a number of investors lend money through a platform to businesses or individuals. Many SMEs don't have the collateral, nor do they have financial records to qualify for bank loans. In fact, in Singapore, we're seeing a $20 billion SME financing gap. Fintech platforms such as Validus enable businesses to obtain loans directly from individuals and institutional investors, cutting out the middlemen, for example, banks. Validus platform acts as the intermediary and risk mitigator between borrowers and lenders. Borrowers are growing SME businesses that require financing for operations or growth and are oftentimes underserved or unserved by traditional banks. Lenders on our platform, either individual or institutional investors, participate in these lending opportunities for high-yield returns through the interest that they earn. Validus assesses credit applications from the SME borrowers and, if approved, make these loans available to investors on the platform to fund. Investors will then choose to fund these SMEs and earn interest on the loan amounts in return. Investors in SME lending opportunities through Validus can expect a net rate of return around 7 to 12% on a well-diversified portfolio. SME private credit is an asset class that has a low correlation to public markets and is thus less subject to volatility. In addition, there's an opportunity to diversify your investment portfolio and further manage risk through investing in many different types of SMEs across different industries. Not all platforms are created equal, though. It's important to choose the right lending platform to invest on. Here are the top 3 things to consider. First, is the platform credible? Does the team have strong financial services experience? Investors should verify whether the platform has a proven track record. It's important to also know who you're lending to. Who is the platform's typical borrower? Does the platform have a good balance of SME borrowers in different industries, and are they originating these borrowers from credible sources, including any partners? How does the platform approve its SME borrowers? What measures are in place to mitigate risk? For example, Validus focuses on supply chain financing, where repayments come from the buyers directly, thereby ring-fencing risk around a strong counterparty.